Good evening, everyone. This is Gary from Apex Pro Group. Tonight I wanted to cover the video topic that I didn't do last night because I was busy in meetings, and that is of the London patterns, the most liquid time of the day to trade when we come to trade at London time, 8 a.m. in the UK. So let's share the screen and get to it. So in this flashcard, you can see our London patterns and the various types that we have. Just get my annotator. So in this one, we have our type 1 London pattern. So you'll see that the blue box represents the Asian session where price is accumulating. And then as we come out of Asia and London starts to open, we see a false move and we see our intraday pattern form from the new high of the day down to the low of the day with 3 intraday pushes and our entry on the second leg of the M formation. So yeah, we see price ranging during the night like this. Then price stop hunts above for a sell, a false move in the wrong direction, and inducement to make an M formation. And then we look to enter on a candle pattern on the second leg, push down, push down, push down. And then we want to come out near the low of the day. So normally on M15 is London patterns, M15, for all of them pretty much. And then we look for the false move above for the sell. And then we look to trade away from the new high of the day. So the initial high of the day of Asia will be taken out. And normally we'll see an EMA there as well. So normally the 200 EMA will be somewhere around here. And this M formation will form off of it. And you'll have your TDI confirmation with the shark fin out of the band and the second leg in the band, and then probably crossing the market baseline. And then maybe a cross of the 13 EMA on the second leg there. So that would be your confirmations and possibly a shift candle away from this second leg here. You can obviously use order blocks and stuff as well if you wish, but we're just going over the BTMM stuff here. There's plenty enough there. So 25 to 50 pips above the Asian range, M pattern off the high of the day, or often at the 200 EMA. Sometimes it might just be a tiny bit above, but the stop hunt boxes are 25 to 50 pips above the Asian range. So that is about that one. So the type 2 patterns, they respect the AR0 levels here, top or bottom, but obviously when we're trading away from peak formation high, we look for M's off of the AR0 at the top. Again, we accumulate during Asia. M pattern off AR0, then TDI, first leg out the band, second leg in the band, cross the market baseline and cross the signal line. So close beneath the 13 EMA and maybe a shift candle or a pattern here. So, and then hold it until you get to a low of the day or towards when New York starts. That would be a very nice entry, or to I don't know, I guess a decent risk reward of 30 to 50 pips or something, whatever the ADR or daily range allows you to have without risking too much. So M off the AR0, top of Asian box. Often again, the 200 EMA will be cruising across the top there. Let me just clear those drawings up. Moment, please. And then we have the type 3 London pattern, which respects the 50% level of the Asian range. So accumulate through Asia, and then we make the M formation off the 50% level of the Asian range. And then second leg entry with candle formation pattern, close beneath the 13 EMA, hold for your 3 pushes down or your ADR or whatever your take profit is. Maybe it's a previous swing level on the way up. So swing low or something, maybe coming from this direction. And yeah, get a reasonable risk to reward. So let me just clear those and then discuss. So it's an M off of the AR50 midline of Asian box. Green RSI and price line bounce off of the stack 50 on the TDI level. So there's a line in the middle of the TDI. The MBL is probably bouncing there, and then the price line and signal line probably bounce off of it as well. And it'll all be around the 50% level of the TDI range. So that could be rather useful. Also, the 50 MA is normally coming out through the middle of the Asian box. We say the water is running through Asia. So yeah, that's the sell setups. Let's go to, sorry, the sell setups. Yeah, let's go to the buy ones. So here we have the type 1 again, and this is to go long. So we accumulate during Asia, then we stop hunt to the bottom, W formation, 3 pushes up, 1 ADR up, 25 to 50 pips below the Asian range. So we actually cut the box this time. Normally the 200 EMA there, new low of the day, W pattern, second leg entry, close above 13 EMA, 3 pushes up, just around 8 AM UK time, between 6:30 till like 8 AM, 8:30 AM. This is the time when London starts to wake up, Frankfurt, the European markets start to build liquidity, and we get the false moves and then the trend move for that session for that day. And then we want to come out of that somewhere near the top if we see an M formation and maybe a close back beneath the 13 EMA there. So when we get in at the bottom, look for a second leg close above the 13 EMA, TDI confirmation with the lower band having shark fin, inner band bounce, close above the MBL, which is pointing up, price line crossing the signal line, confirm this with your close above the 13 and probably a shift candle or cord of wood, railroad tracks, morning star, something like that, and then hold it until you've reached your risk to reward previous swing point, a swing high or something, and then look to exit it if you see an M formation or a close back beneath the 13 EMA. Also, if you see price shark fin on the TDI at the top and then come back in and close beneath the market baseline, then you probably want to get out. That's my advice there. Again, with the type 1, we go below the Asian range, normally down to the 200 EMA somewhere here, new low of the day, and then trade away from it on the W formation. Type 2, we have consolidation during Asia, stop hunt to the AR0, which is respecting the bottom of the Asian range, second leg entry, 3 pushes up for the intraday pattern, and then holding for 1 ADR until we touch either a previous swing high or something where we are happy with our risk to reward ratio. Also, TDI would be the same. First leg outside of the band, second leg inside the band, cross the signal line, cross the market baseline, exit on the other side of that where you shark fin the other side, and then close beneath the market baseline or the 13 EMA here is another sign to get out. So often the 200 EMA will be going here too. New low of the day and trade away from it. Let me clear these drawings. And then the AR50, which is the long setup this time, accumulation during Asia, midline of the Asian range, W formation off of it, close above the 13 EMA, 3 pushes up on the M15, 1 ADR up if you don't get these stop hunts, because this is a fast moving market this day. You might not get a pullback. The 50 EMA will probably be present in the Asian range, so it'll probably be floating through the water running through Asia, close above the catch up here. Let's see, TDI would be MBL, sorry, Bollinger Bands would be there. First leg outside, first leg inside, cross the market baseline, price the cross line, price crossing signal line, and then 3 pushes up to the high of the day, exit on close beneath the 13 EMA the other side, or shark fin and close beneath the MBL here. That would be like the opposite of down here, so why would you stay in there? So yeah, you'd look to get out at a previous swing point, or where you see some kind of reversal. If you trade New York, then once these patterns have been established, you can look to take the reversal back to the 50 EMA or the 200. Should probably be down here somewhere. So and before price goes back into the consolidation of Asia. So again, here you could look to trade back to the water or the mayonnaise. That's it. Yeah, because but we don't do that in level 1 because we don't counter. So this was an explanation I wrote about a year ago. I was just speaking, he was asking me about the London patterns. Type 1 is below or above the Asian range, hit the stops, false move to create lower the day, higher the day, normally off the 200 EMA, M15, then create an intraday pattern for the pair. Type 2 is within the Asian range, where the dealer creates a WRM off the AR0, M top of the box, W bottom of the box, normally close to the 200 EMA, M15, and then they will start the intraday pattern cycle from this point. Then we have the type 3 London pattern, the straightaway trade, which is off of the AR50 level, which is an M or a W, which is formed off the mid-range of the Asian range, and with the 50 EMA present, and a TDI line price bounce off of the market baseline. The type 3 entry, we normally get 2 entries, one on the second leg of the MW, with a close above the 13 EMA, nameable pattern, railroad tracks, shift candle, morning, evening star, or shift candle. Our second entry would be the break and retest of the AR0, the top or bottom of the box. Same principle as second leg entry applies to type 1 and type 2 patterns respectively. So what I'm basically saying there is when we have the W, will probably also get a bounce here off of the apex or the nadir here. So yeah, you can have a second leg entry and a second one here, and one here. Hope that helps, guys. As mentioned over the weekend, the higher time frame completes the level. Sorry, as mentioned earlier, over the weekend, when the higher time frame completes the level, the lower time frame has to reset to complete the pattern and continue the trend. Each of the resets after a level on H1, we get a reset in M15, giving us high or lower the day, presented normally in one of the forms above I mentioned. As with this principle of higher time frame level, lower time frame cycle and reset, we therefore expect the same in the higher time frames, as they are fractal. With this said, our resets normally form off of the 200 EMA and H1 after a cycle and a pullback after completed a level of H4. We reset an H1 to continue the next level of H4 with another cycle of H1. In a fast-moving market, the same principle as a type 3 straightaway London trade would apply. We may see a reset off the 50 EMA of H1 and continue from that point being our new high of the week or low of the week. So yeah, when the price doesn't pull back much like it doesn't in the type 3, and we have the straight away trade off the 50 level with the 50 EMA present, although we don't have that Asian range on the H1, we could still have the reset, which is what the London patterns normally are, with the new high or low of the day, but straight away like a type 3 reset and continuation from a new high or low of the week there. Let me show you the next slide to explain it better. So what we actually have here is a drawing that explains the different cycles and levels. So one level of H1 is from peak formation low is the equivalent to a cycle on M15, and then a reset, not a peak of M15. And then the second level of H1 is another cycle of M15 and another reset of M15, not a peak. And then level 2 to level 3 is another cycle of M15, a reset of M15, not a peak. And then continuing up. So after level 3, we see a reset in H1. And then these 3 levels of H1 mean that we have completed a level of H4, and then we complete another 3 levels of H1 to complete a level of H4, and then this takes us to level 2, and then we complete another level of H1 and another cycle of H1 to make another level of H4. All of these 3 with the resets in between. The H4 cycle completes a level of D1. So yeah, so the cycle of M15 is 1 ADR, the cycle of H1 is 3 ADR, the cycle of H4 is 9 ADR with 3 ADR per level, and then obviously 9 ADR would be a level of D1, and 27 ADR would be a cycle of D1. So 9 ADR per level of D1, 27 per cycle. And then I explain that here, what these are. 3 pushes plus a reset is a level 1 on H1. 3 levels plus a reset on H1 equals a level of H4. 3 levels plus a reset on H4 equals a level on day 1. So this is quite a nice drawing and gives you a nice basis for understanding levels and resets. Just remember, a cycle on the lower time frame, like here, plus a reset equals a level of the higher time frame, and all cycles and levels are fractal. Guys, I think that's it for this video tonight. I hope this helps. We've covered quite a bit. So yeah, I really hope this helps, and I'm going to post this in the group and on YouTube. Please share it on your socials. Let's get this video lots of views. Let's get it shared about, and let's get our group to grow and help as many people as we can. Obviously, we also have our tools for trading and our tools for our analysis, the Apex Hunter dashboard and the Trade Manager are great tools for making this analysis easy and understanding what is actually going on. If for you guys that don't know, the Apex Hunter, if you look in some of our other videos where I explain it, is like a market maker's method dashboard that shows the cycles in real time on across 28 pairs, including crypto, stocks, and currencies. So yeah, anything on the MT4 platform you can put onto the software. Guys, thanks so much for listening. I hope you found some value here, and good luck with your trading tomorrow. And yeah, thanks so much. Goodbye.